Should we get right into the banks? I mean, I don't want to run out of time for the banks. I think with the banks, you really need to look at that FDIC.gov. I think you also need to familiarize yourself with the term bail-in. Do I have insider information like Martha Stewart that it's going to happen? I do not. Do I feel in my heart and stomach that there's a good chance it's going to happen? I do. That's always my Boy Scout in me. If you have it, you don't need it. So what? If you need it and you don't have it, you have a problem. And I'm that way.
I don't know how you say that we don't really have insider information on that because, a few weeks ago, we played the clip from the FDIC talking about it.
I guess I am a bit pessimistic about your ability to communicate with the people who really need to know in terms of a crisis. I would think your strategy ought to be to disclose as much as possible to people who professionally need to know about it. And that would certainly include the ratings agencies and the people within the banks who are responsible. Because we're dealing with a society where people are getting their information in tweets. There's just no patience, I think, for going through the elaborate and careful planning that has gone on. It should be there. It should be accessible when people need to know. But I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? My insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. We want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that will charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be. It could be an early warning signal to the FDIC and the primary regulators when these things happen. Who's going to be protected? Who isn't going to be protected? And I think an interesting study to look at the evolution of market prices in a situation like March of 2020, for example, and see whether people understood what might happen.
Yes, they told you what they're capable and likely to do. So I think people should at least know what it is, know what would happen if it occurred, and then act accordingly. If you know everything about your financial product, you'll never have buyer's remorse. If I tell you about a bail-in and it doesn't happen, so what? You know more than 90% of this country. But if I don't tell you about it and it does happen, we have a big problem. You know what the problem with that information is? Who cares? We offered to people, call in the office, text us, email us. I did it again yesterday with a young lady that was in the office, brand new client. Thank you so much for trusting us. She was going to do a Roth IRA with a bank. And I said, I can give you a couple reasons you may want to at least know what else is out there. I was like, she wants safety. She doesn't want the volatility of stocks and bonds. So she was going to do a bank. And I said, I may have a solution for you. So we talked about the rules being 59 and a half, having one for 5 years. We talked about the tax ramifications. I said, your bank has 1.10% coverage through the Federal Deposit Insurance Corporation. And I showed her FDIC.gov, take the little search bar, put in DIF, which stands for Depositor Insurance Fund. And that kind of surprised her. She was like, so that really could be a problem. I'm like, yep, that could be a problem. So get over to an insurance company. We showed very much parallels in how it works. We're going to do a 5-year term. At the end of the 5 years, it's liquid. You can move it. You can move part of it. You can let it roll over, whatever you want to do. And I showed her, you're going to have more than 100% guaranteed coverage on your money.